This is our big story tonight. The Nigerian Exchange Limited today presented that review of the exchange's activities for last year and outlook on the current year 2022. The presentation by Temi Popoola, the CEO of the exchange, at a webinar organized in partnership with Renaissance Capital, focused on technology, innovation, new listings, among other such strategies for the new demutualized exchange. The NGX CEO, Temi Popoola, joins me live now for an exclusive interview. Thank you for making it tonight on the show.
Good evening. Thank you very much for having me.
Thank you so much. Quite a whole lot of a 1.5 hours webinar today. Give me the key highlights of the performance of the NGX last year, Temi.
All right. Thank you very much again, Bosin. And indeed, we did have this Outlook event today where we reviewed performance last year across most of the asset classes that we trade. And then we spent time with, I would say, a few seasoned, market veterans to walk us through what the global macroeconomic picture looks like and to make forecasts for 2022. I think very quickly, last year we had about a 7% growth in the market capitalization of the equity asset class, the equity listings. We saw closer to a 12% growth in the size of the fixed income listings that we have. And the ETF asset class, we saw a decline in the number of ETF issuances, which was understandable because we're coming from a very high base in 2020. But overall, the markets for last year were very strong, at least when we compare ourselves to a few other African markets. One of the things that came through today is that if you look at performances globally of most markets, those markets that took a more, call it market-centric, market-friendly approach to dealing with the economic fallout of COVID, you're seeing them come out of the pandemic from an economic and commercial standpoint much stronger than those who didn't in that way. Thank you.
Aside from these key statistics, tell me other major milestones that you crossed last year. You became a newly mutualized exchange. That's a very big headlines, isn't it?
That's correct. Thank you. And we did discuss that as well. It's hard to talk about the exchange for 2021 and not talk about the demutualization, which essentially was a corporate restructuring that the old Nigeria Stock Exchange went through. It gave birth to a non-operating company, a holding company, that now the exchange is a part of that group. And in that process, of course, I think the biggest takeaway is the fact that now we have the core commercial activities of the exchange, as NGX, or the Nigerian Exchange Limited, separate from the regulation function of the exchange in a separate company called NGX Regulation. Now, I think the benefit of this is that it puts our market really, puts regulation, enforcement of rules, and just ensuring that the integrity and the sanctity of our markets remain uncompromised. If you go back in time to the late 2000s, where our market suffered this collapse, what you would find if you try to trace things is that just the level of respect that markets and players had at the time for governance, for regulation, it could certainly have been strengthened. So in this new environment, it's something that we've taken very seriously. And this structure allows us to do that, and also allows the exchange itself to then run a little bit more commercially. It allows us to stay closer to our clients. It allows us to try to solve more problems for clients, whether those are listed clients or whether those are investors, local or international, retail or institutional, who are looking to do activity in the exchange.
But again, if we've tried to give a future forward taste to this conversation, what's on your playbook or outlook for the new year 2022?
Okay, so I think, of course, the exchange will somehow be limited by both the macroeconomic environment outside Nigeria and also call it the Nigeria-centric dynamic. So you speak first about the former. The flow of capital, if you go back in time, about 50% of the flows into our market up until about 3 years ago was from foreign investors. And so they're a class of investors that are very, very important to our market. They're important for our markets. And some of the happenings globally away from us will dictate and direct that flow. But we think we see a risk-on sort of, appetite by investors. So we see that driving activity for us. Then, of course, the local dynamics, it's a pre-election year. Generally what you find, and we run the numbers, run the data, ahead of elections, you'll have maybe a very busy first half of that year. We're seeing that already this year. I mean, if you just look at the value of transactions that have happened on the exchange, the pipeline of potential listings, even actual listings as well, you'd see that it's been a very busy start to the year. And then, of course, things could potentially get a little bit more quiet as people just think through what the next immediate future would look like. So we think those are some of the dynamics. And then away from that, of course, is the exchange itself. We're asking very deep questions of ourselves, how we can position ourselves. The competitive landscape continues to change, particularly internationally. Just this demand for capital increasingly gets tougher and tougher. So we have to really go back to look at exchange, look at our listing rules, look at the types of corporates that we're trying to attract, speak to everything around even product development, product origination, to make sure that our exchanges run sustainably, ultimately.
Yeah, but you'll want to deepen the market further in 2022 moving forward. What more would you be doing along this corridor? You give a list of some of the items. Give a list of items on your menu.
Sure, I like how you call it menu. But yes, indeed. So I think the first thing to be aware of is that we want to build on the momentum that we currently have. We concluded last year with a historic transaction where we had, for the first time in the history of our markets, the ability to raise capital. It was done digitally. Investors, for the first time, were able to, from the comfort of their living rooms on a device, in the space of minutes, get access to this offering, whether or not there were existing investors in Nigeria. So really, we're asking ourselves, how do you replicate that from the primary listing standpoint? But maybe more importantly, how do you digitalize and digitally transform all of the user experience or customer experience with the exchange so that it's not just primary offerings, even the secondary market trading, we can find ways to do this. So this is for us very big, of course, because as we look to also attract what I call the underbelly of the Nigerian demography, this very young, youthful population who are currently not consuming products on the exchange, the way you do that is through technology. Then, of course, listings remain at the very heart of what we do as a business. It's the listings that lead to trading activity, that leads to investors coming to the exchange. Those investors then need other sorts of products. So there's a lot of emphasis on listing. We had a very big listing already this year, January. We think that there's a few more of those. And the listings that we're looking for are listings that we're looking to diversify our exchange. We want the exchange to better reflect the GDP makeup of the country. So you'd be seeing activity within food, activity within power, activity within even technology. Let me speak about technology very quickly. You touched on this during your earlier comments. One of the things that you find is that whilst the traditional IPOs and the traditional listings are not happening as frequently as you would like, within the technology space is a lot of capital raising and capital formation that is happening outside the traditional exchange. Now, parts of this is understandable because a lot of that capital raising tends to be very early stage, which tends to be more VC type funding at the best. But nonetheless, there are some companies that are mature enough in there that ideally could tap our markets. So we're doing a lot of work to really look at our exchange, look at our rules, look at the sorts of barriers to entry, and really ask ourselves how we can make those fit for purpose for technology companies. So working with the...
But within the wider economy, you touched on special agro-processing zones or special economic zones. What can we expect on that very quickly in just a minute?
Okay, sure. Very quickly. So last year, for example, you had the longest ever corporate bond issued by a company in the free zone. And some of the work that we're trying to do there is to make sure that companies in the free zone, which are going to be one of the biggest drivers of economic growth, today they can't list equity because of the way that they're set up and the rules that govern, equity capital raising in Nigeria. So we're working with our apex regulator, the SEC. They are taking a very frontline leadership role there in making sure that our markets, from an equity capital raising standpoint, will be available to these companies.
Temi Popoola, Chief Executive Officer at the Nigerian Exchange Limited. We really appreciate this conversation with you. Have a wonderful evening and see you next time. Thank you so much. Congratulations and wish you all the best.